The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Okay, folks, Larry Pesavento for Steve Rhodes. As you can see here, this is the pattern that we're looking at here today. It's completed a beautiful double ABCD pattern up here at this 113.90 level. We're trading at 113.62 right now, so it's still been a really tight range all morning long, and it could go above here very easily, folks. And if it does, that means that the U.S. dollar is breaking down big time, and that means that's very bearish for the Treasury bonds. If Treasury bonds were trading at 111.30 just a minute ago, I'll review those before we finish up. But we got a couple of other trades on that. By the way, we exited the wheat a little too early. It's gone up another 7 cents from where we exited the position, but it was a very nice move. We made just under $1,000 on it, so that worked okay. But we do have a couple of trades that we talked about yesterday that we really should get into. This is the one, of course. I'm going to do the good, bad, and the ugly, okay? This is the Goldman Sachs trade is working nicely. We had a perfect head and shoulders pattern up there at 616. The stop was 622. We're now trading at 602. That's got $1,400 in it, folks. So one thing you want to do is you do not want to lose that $1,400. So I would move my stop down to about 610, locking in some money on this and then see what happens. But that is a perfect head and shoulders pattern and right at the 786. So that one's working okay. Now, the next one we were looking at, of course, was Tesla. That was what I thought was the best trade of the day yesterday. And we'll get up here and we'll take a quick look at it. There's where we were yesterday with the big ABCD. We went above it by $2. And that was at 351. We're now at 344. So that's got a $7 profit in it. Again, that should not go to a loss now if you're in that position, because you're only risking 3%. Now let's get into the bad news. This was my favorite of all, and this one's not working. Hold on just a second. This is the weekly chart. Now, I don't do weeklies too often, but we'll get the weekly chart right up here, and you'll see there's where we are. Move this over. There's the weekly, and as you can see here, the sale was basically at 170, at 171.89 right now. The stop is at 173. You're not going to risk more than $3 on a $171 stock. So your stop has got to be at 173. If they get you, they get you. That's all there is to it. But that is a head and shoulders. There's your left shoulder. There's your head. There's your right shoulder. The symmetry is right. The right shoulder lower than the left shoulder, that's a bearish pattern. But this bearish pattern may not work. Now, what we are going to do is we're going to just go back and review this, because we've got a potential ABC. Well, it's not a potential. It's already happening. There's your 382. There's your shoulder that's supposed to come in. Now, what we're looking at now is an A, B, C, D pattern right here. Now, remember, I don't do stocks. I used to say never, but that is it. The answer is never. And then you'll see here, this measures to 173.47, and our stop is supposed to be at 173. This is a $170 stock, folks. So if that's 173.47, we could do that and it'd still be bearish, but we would be stopped out, wouldn't we? Now, all I'm going to do now is I'm going to raise my stop from 173, and I'm going to move this out of the way here. And I'm just going to raise my stop and we'll give it another $2. So I'm going to put the stop in at 174.50. So instead of risking $3, I'm going to risk $5. And the reason why is I'm staring at this number right here, 173.47. We're only $1 away from that, but I've got to have my stop above here. There's your ABCD. And that's what I'm doing as I'm trying to figure out what to do with this. All right, so we have Goldman Sachs that we looked at. The Google is not working too well. Let's see if we had another one in here, as I recall. Oh, NVIDIA has not fulfilled the thing yet, folks. Let's get NVIDIA up to take a quick look at it here. And you'll see there's where we are with NVIDIA. We'll get this daily up. See, this is what we want to do with NVIDIA. We want to see this close in the lower part. Now, right now, it's up on the day, a couple of bucks. But I'd like to see it close at 132. And if it closes at 132, we've been here 1, 2, 3, 4, 6 days here at this level. There's a lot of volume and stuff has gone through here, folks. Okay, and we got a couple of gaps in here. But this looks very similar to this one over here. This was a 3-day island. We're in a 6-day island. Pretty soon it's going to be like Hawaii, I guess. It might be there permanently. So anyway, that's what I'd be waiting for, to see if it gets to that. Then that would trigger. Okay, now we'll move over here. Make sure I covered all of those that we're looking at, and that we had a question about the natural gas. And folks, we talked about natural gas yesterday. I've got to show you this because it's been a real wild one today. We'll get the I think that was the 4-hour I was looking at this morning. Yep, there it was. There's where we were yesterday. The market came down. At one time, had a $600 profit. About the most you would have been able to do is break even or make $600. But look at today, folks. We went exactly to the 50% level. Exactly, 50, right on the money. And I was doing a video this morning when that was happening, and I said, take a look at this, because this is still a bear market, and we're having one heck of a 2-day rally, and it's went from 50, it dropped 1,600 points down to this level right now, and this is where we're standing right now. We're nearer to the low of the days yesterday than rather the high of the days. If you were to look at this on a short-term basis, it gave you a really good chance, if you like the old 382. There was the big move down, there was the rally up, and there was your 382 retracement right here. Then you make another new low, so what you need to do is to change the 382, come over, mark it again, and you'll see what did it do? It went right up to the 382 again. This tells me that we're looking most probably at least this 1, 2, 3 drive to a bottom pattern down into this level right here, just based on these 382s. Now, if we move to the hourly chart, just to see where there might be some support, we want to look at this, and we're going to clean all this out. And what you want to be watching for is the 382 off of the bottom, all right? And where does that come in? Ta-da! That's what we hit just a little while ago here at 353. So as long as we can stay above this, we still have a bullish bias. But below here, ooh, not so good. So I want to put my beeper in here to let me know if that occurs. So there might be a trading opportunity lined up with that. Now, I've also been asked to review that wheat trade that we did. Hold on one second. It's already in the history books, folks, so all we're going to do is just look at it to see what we were watching. We were watching December wheat, and we got out at 79, and just a second here. This is the weekly, I'm sure. Just a second. Get this up on the daily. There was the pattern right here. Now we're rallied all the way up here. We've gone above the 618 of the previous day. That was our price objective right here. I got out at 79, making sure that didn't give any back. Of course, I left another 400 on the table. But we'll be right back. 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Okay, folks, we're going to switch over to the gold market because we've been up here all evening. And, of course, we had a pretty big break. We dropped about $40 into this low right here, and we're now taking it back. This looks like we're ready to get above these levels right here, folks, what it looks like. Now, what I was watching this morning is I looked at the 4-hour chart. This was a perfect 135 pattern setup. You can see the number here that we're looking at is at 25. So far, the high has been 20. So it would be not unusual to get up here and make a little bit higher high to complete this 61% retracement. You can see the little pullback that we had here came all the way down to 90. So it dropped, one harmonic number, $36, right to the bottom, and we came right back. Now, if this is good, if we get above this level right here, which would be 33.26, we'll put that in here right now, this thing should take off because you've got a perfect ABCD pattern right here. You've got another one right there. Everything says it should stop right here because it's taken a whole week to get to this. It's expended a lot of energy. But look how quickly it's come back here this morning. I mean, it's just really, very, very strong. You look at this on a smaller time frame. Look, there was where we were, and look, we're bouncing right back up to where we were once before. See this, we were dropped there 30 some bucks, and now all we're doing now is make another ABCD pattern right up here again right now. So there's where we are. Now we can get above that. That tells us this thing has got legs and it's going to take off. So all I'm going to do now is to put my limit minder in here to see if we get above that, because I want to see how it acts, and we'll all learn something on how these markets operate as we go through. But right now, this should be the end of it if it's correct. But remember, it doesn't take very long for this thing to break. So that's what we're watching. All right. That's just about risk control. Now, we've got a whole big difference in these markets. You can see here, this is the Dow Jones that we're watching here this morning. We've had the big move down, the move up. Look, another pullback here. This was basically, we go from 29, we dropped 600 Dow points. Okay, we stopped right here. We're going to measure it just to see. You can see it was spot on, almost exactly 50% again, just like it did the last time. We'll move it over here like that. And, it looks like it hit the exact 618. Sorry about that, guys. It sure did. Move that over so we can see it. Yeah, it hit the 618. Not only hit it 1, 2, 3, 4 times this morning. So that tells you there's really strong support in here. And that you can see we've rallied 200 points from that level, and we're still holding strong above that. So this is going to be the key level, to be watching as we unfold these things here, as what we're watching today. Now, I'm going to switch over now to the crude oil, and I know there's not a lot of stock stuff, but Steve's a commodity guy too, so there's crude oil. Now I'll move this over just a little bit so we can see we've had that big move up. Okay, took out those high. Oh, okay. Now Google, folks, let's since we're doing Google and we have I'm not in this trade, but I want to show you why I did what I did, and hey, I could be wrong about this, but I just want to get this because it's doing exact timeout. I've got to cascade these so I can see Google a lot easier here, and I can pull it up without any trouble at all. Except I got so much stuff in here to try to tell you what's going on. There it is right now. Now we're just going to get back up here to the hourly chart. And there's where we are right now. That thing we just drew in just a little bit ago, and there it is. It's coming in together. Let's put the daily up so we can see it. That's where we were. And there it is right now, banging right against that number we were looking for. There was your ABCD right there. Right now. So that's what I did. Now I moved my stop. I sold it at 70 supposedly, and then I put my stop at 73.50, which would be taking it out right now, 73. So I moved my stop, and I'm going to bring it up here to 75. So I put my stop would be right about there, because that's how I'd be managing it if I were doing it. I would be doing the same thing if I were doing it with a commodity, or if I were doing it with a wouldn't make a whole lot of difference. We'll see how these things unfold, but that's pretty much it. Now, this is we've already covered the wheat. We've already done that. And but I wanted to show you that's what I was looking at. So now I'm sitting here with a $3 loss, and I should be out of the trade with a $3 stop. But because of that ABCD, I'm willing to give it a little bit more time. All right. I do the same thing with commodities that I do with the stocks, but like I said 100 times, I just don't do stocks. Okay. All right. Let's make sure we did that. NVIDIA, we've already covered. NVIDIA, we want to get it below that 132 level, and this doesn't want to do that right now. And see, we got the euro. This is the pound. Let's watch the euro, because that's the one I think is running the whole show. See, we're banging right up against these levels. Now, all I'm doing now on the euro is I sold it up here at that level. At least I mentioned that's probably what it was going to be doing. But if we look at this on a smaller time scale, we'll just move down to just use the 2-minute and see what we're looking at right here. Okay, there's where we were. We got up to the 78% level, and now we're back here to this level right here. So, it's still working a little bit, but, really not much to write home about. Okay, now let's make sure I don't miss anything at all. And I want to get back to, we've already covered the wheat, and we've covered the other thing. Oh, we want to cover the soybean market. Just 1 second here, because these grain markets have picked up, folks. As you know, that following the wheat market, they're starting to get better and better. So let me get up here, and we're going to take a look at November soybeans. I really think that's the play to be. If we get above that 1170 level, hold on a second, and I'll get this. There it is right here. Okay. We got a long way to go to get to that level, but you can see here we are starting to come back up. Get rid of both of these. Just 1 second. We made some time. This is a weekly. Give me a daily, Larry. Come on. All right. Yeah. See, we're not there yet. This is what my game plan is, folks. If we clear above this level right here, that's another 15, 16 cents. I have to be long beans. I don't buy breakouts very often, but sometimes they're really big. And here was one that was the same thing. You see how you had that trend line coming down, and what'd you do? You gapped above it, pulled back to it, right at the 382, folks. That was the 382. Let's just draw it in so you can see it. We'd already talked about this before, but there was your 382 and that pullback right there. And as you can see, there it was just exactly to the 382, right on that downtrend line. Took 1, 2, 3 days to get down there, and now we popped above it. That tells me that once we get above that line, folks, beans are going to go a lot, and that takes them up off the top of the bar. 112? Are you 111.26? That's $3,500. Look how much you're risking here. Virtually nothing. So watch that. That's a very interesting one to be following. I think we've got it 46 seconds to go. Let's take a look and see how Apple's doing today. And then we'll get back. And I'm going to go over some more foreign exchange stuff when I come back, folks, along with the bonds and the notes, because that's where the play is going to be. It's in those right there. If I can just find Apple right here, get the daily up on that. Oh, God bless America. Hold on. Well, there it is. There's Apple. It's down a little bit. It's actually up on the day. So it's doing the same thing. We got to take a look at this. Hold on.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, Larry Pesavento for TFNN. This is the same pattern here in this apple that we had in that November soybeans. You see how it touches the downtrend line setting right here? That would have been buying it right around 205. It's 206.68, something like that. But that's just basically, if this is good, this thing's going to really take off because it shouldn't get below that point right there. If we looked at it on a little bit shorter time frame, let's just go to the hourly. It's probably set right at the 61% retracement of the previous day's low. Nope, right at 50% of the previous day's low. And I believe we have Paula Webb in the house. PT, how are you doing this morning?
Woo, woo, woo. Yeah, I'm in the house, baby, with bells on.
Say, tell us, did you hear the explosion? How close were you on Sunday when the thing exploded?
I was about 10 miles away from that.
Okay.
You
didn't hear it at all.
I try to stay away from crazy Palm Springs.
Oh, yeah, that's for sure. You're out in Rancho Mirage or...
right around that area, yeah.
Yeah, that's what I figured, yeah.
It's kind of like a suburb, but it's nice. It's a little less hectic than Palm Springs. Crazy politics.
Visiting Frank and Dean when they lived down in that area. You know, I used to go down every weekend to hang out with them and stuff, you know, like me and my dreams. Hey, listen, tell us we got volatility here in spades now. You must be getting phone coming off the hook now, given the fact that we've had so much volatility. What is a person, when they ask you a question, how do you handle it? How do you answer the volatility?
Well, trading is trading, Larry.
That's right.
We all
for your answer.
Okay. And if someone is not prepared to adjust their mindset to whatever market conditions are facing them each morning, then that means they have not put their warrior armor on. And this is something that we go over quite a bit in my workshops. But just like any soldier who goes into battle trains. They train with their armor on, so that becomes a part of them. And every trader is entering into a battle into the markets every day. And if they don't have their mental armor on, if they don't have a clear prospectus of what they're going to accomplish or attempt to accomplish to achieve their goals each trading day, then they're toast. And no soldier knows what's going to happen in any battle. They can have an idea based on, their knowledge of what the enemy may have in terms of armaments and tanks and bullets and planes and bombs and all that, but they don't know what the plan is on the other side of the enemy. Whereas traders, it's no different. We have no idea what the markets are going to bring to us every day, and so you have to be open to any and all possibilities and be prepared to engage in that. And it's no different than any soldier going into battle. And we're in a financial battle, which is much more important. Of course, than a physical battle. But, if you lose everything financially, your health is going to go downhill pretty quick after that anyway. So it's kind of intertwined. So for anybody to, any of my students to call up and say, oh my gosh, the volatility, I just can't deal with this. It's like, well, then stop trading. Stop trading until you figure out why you feel you are not equipped to deal with current market situations.
Yeah, but the hard part is getting them to stop. We know that's...
well, exactly, right. Which brings me up to... yeah, I know. Which brings me to another point about crypto. And I know there's a misconception out there, completely erroneous, that I am anti-crypto. I am not anti-crypto. But both your question and the crypto trading, it's all about money management. Now, if we're in volatile markets, you have to manage your money, meaning you have to manage your trading account. This is your money that you're investing in yourself, in your financial independent future. So you have to manage it. And with all of you crypto traders out there, if you don't take out 25% of your profits at the end of each week, then you're crazy. I mean, we've seen FTX go up. We got the recent one was Coinbase now is trying to back out of knowing that accounts were hacked. And there was a 3-page spread in the New York Post on Sunday from other people in the industry talking about money management in your crypto account. You don't need to leave 100% of your crypto profits in your account to make money. That's ridiculous. So if you're not taking any of your profits out of your crypto account, then be prepared to lose the battle in the markets, because those crypto platforms are not regulated and they can close up shop overnight. And if you guys haven't learned that by now, don't come back and yell at me. So that's my lecture for this morning.
Well, it's doing pretty good. I have to go along with that. Now, you've got a new book coming out. It just should be any time now?
Yep, we're kind of finishing up the rough draft and then getting it ready to go into publication. It's The Sacred Path of the Warrior Trader, and it takes on basically what you asked this morning, how to deal with volatility or any kind of market conditions, and, money management, time management, and learning how to act like a warrior to win the battle of trading the markets. It's pretty cool. It's got a lot of good stuff in it. A lot of good stuff. All brand new material.
Well, you've got a lot of experience with the writing, that's for sure. Listen, we're going to have you on again at 10:30 when I do my regular show. So we'll see you again and have some new material for us, and we'll talk to you then, okay?
I will.
Okay. Hey, Paul, PT, tell the folks how they can reach you. I should post an address in there so that they can reach you.
PauliTWeb.com, 760-636-4290, or my cell. We now have a cell number for the business, 442-256-0548 if you need to text me in a trading emergency.
That's great. Hey, thanks for joining us. We'll see you again at 10:30, okay?
Super. Thanks.
Okay. All right. Okay, we're back, folks, and we might as well get this bad news out of the air here. Let's get here with our Google trade that we're watching. I'm going to put this up on an hourly chart so you can see I moved my stop to 175, and you can see we're almost in the promised land. We got to 174. So my stop is at 175. It's trading at 174. I sold it at 170. Hold on one second here. We've got I know what's happened. We don't have the charts up. Let's try that, Larry. My goodness, you think it'd be your first show. Let's just get up here, and then we'll get it up here. It's always good to put when you lose trades, folks, to see what you did wrong. And here's Google. First of all, I was doing this on a weekly chart, which the number of times I do a weekly chart, you can write on the head of a pin, because I don't do stocks at all. But this is still a head and shoulders pattern. It's just that I entered at the wrong time. My timing was not perfect, but there's your head and shoulders pattern. It's got everything there that you'd like to see. Now, it's a day off. Okay, now, there was a number. There was your ABCD at 173.62. Okay, the high today so far has been 174.53. The stop, by golly, it got us, because I put the stop at 174.50 and the high was this is great about paper trading. Anyway, so this would have been
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, Larry Pesavento for Steve Rhodes. We just took out the 382, folks, by just a few pips here for the natural gas. That came in at 435.53. We came down as low as 35, went a point, 1 point below that. Now we're sitting right at it. Really important that we hold this support, folks, because that's the 382 of this big move. And as you remember here, when we were looking at this on the 4-hour chart, we had such a beautiful pattern up here at the 50% level. And now what it's doing is it just pulled back just a second ago. The number we were looking for a low risk buy would have been right there at your level at 435.60. We're at 436 right now. You have to risk about 3 points on that, $300, but this is a really active market, as you can see, and the 382s work really nicely. They don't work all the time, of course, but when they do, they work really good. You can see on the way up, you had several of them here that lined up. I'll just quickly go through and look at these because this tells you that you're in the strong trending market. There was a big bottom down here, and there was your absolute first 382 retracement here. This took 2 days to complete. Okay, when that completes like that, with that period of time, and you do the ABCD structure on this, you'll see AB equals CDs takes you right up to the promised land up there at 377, and we went to 380, and then boom, you can see what's happened here yesterday. Well, this is several days ago, but then this came down and bottomed, rallied up exactly to the 50% level, and it just hits these Fibonacci numbers just like, well, it went a little above the 50%, didn't it? Yeah, I didn't realize that. Why did that look different? Hold on. There's something's not right with this. Let's just double check. Yeah, it is right. I'm sorry. There it is. Now you can see we're breaking badly now. If you'd have been in this trade, you would be out of it now because you've been buying at 530 and then you would be out of it. See, we're taking out those lows of yesterday and now we're heading down, even lower. I was watching this morning and got a little bit lucky on it, I guess. But on the 8, you would notice here after the rain, there's the number we were just talking about. Remember, there was your first 382 was right here. There was your second 382 right here. And now we are heading down. And that's going to be a small 3 drive to a bottom pattern here, natural gas. And remember, this is just an 8-minute chart, but they're all the same. Wheat, corn, beans, natural gas, they all do the same thing. Google, and that should tell us we should have some pretty strong support right in this level, right about here, between 332 and yeah, it should be right about where it is right now, because you got another smaller ABCD right here that you're dealing with. And this is when you're dealing with these, what it does is it keeps your risk relatively small. See, there's the ABCD on that. So that's where, if you wanted to be a buyer, there it is at 334, your stop has to go below right there, because there's your 382. If that failed, See, you got to put the stop right below here. So we're going to see what happens. I mean, this is smaller time frame, but that's what you're looking at. You're in a downtrend on this, folks. That's why if you'd have been prepared for this, you wouldn't have bought the 382. You'd been waiting for it at least to complete to that level or possibly this level. So I wouldn't be afraid being a buyer there at 334. Then you can put your stop right below there. You only have two, but this paid a lot of money, folks. This is a lot of money from this move here. That's over $1,000 without risking very much. So that's what I do when I'm watching these things, short-term, long-term. Try to keep the loss as small as possible, because it's not how much money you make, folks. It's how much money you don't lose, and that's the real key. The big things to watch today, from my point of view, is this gold market. There it is, right there. It's on the shorter time frame. We just did it just a second ago. Went right up to that, okay, but we get above this level right here, you don't want to be short if we get above that 33.30 level, because it's still got a chance to have a pretty good run. We're having big swings in gold today. The high was 33.22. We dropped $32 to the bottom, and now we've made an ABCD to the upside, and it doesn't look too bearish to me, so I'd be watching it really, really closely. Now, we had a little bit of a sell-off here, but not too much at all. Watch this. We get above this level. That would be a really good sign here. I'll put the limit here at 33.20, because if we get there, we're going to get above these levels pretty quickly, if in fact it has some bullish potential, and it has a little yet. So I would be watching it. That's well, I watch a lot of things, as we say in the trade here. Okay, let's move on here to get out of the way. So we basically took a loss in the Google. It's paper loss, of course. I'm sure some of you people did it, which unfortunately, if you did Goldman Sachs, you made really good money. If you did the Tesla, you made really good money, and that's about it. So we'll move on here to the next one here, and there's where we are. Boy, we're moving. Wheat is still rocking and rolling, folks. We're all the way up to almost up to the 786 now. Boy, see, there's the one that you always kick yourself in the rear end. I sold it here. Now it's up another 10 cents to this level right here. It looks like we're going to get there without any trouble at all here today. So unfortunately, that's it. I had to decide whether to take $1,000 or roll the dice and shoot for another 500. And unfortunately, it would have made another 500, but if you make a big profit on something like this that you didn't have to risk very much, you made 2 times as a double bagger. They were only risking 500. You made 1,000, so you'll still get a chance to buy it. It's not very far away from the number right up here. You can see we're almost at the 786 right now, and we'll see that's a 786 off of here. Let's just measure it off of some of these other things back here. There's your move right here. Oh, my goodness, we're at the 382 of the whole thing right now. That's way back there. So I'm okay with it. You know, you can't get, no one buys the exact low and sells the exact high. You know, only God, and she only trades 3 days a week, for heaven's sake. So that's what we're watching here in the December gold. Let's take a quick, let's try it again, folks. That is December wheat, and March is doing, July is doing pretty much the exact same thing. We're just setting over it right now. This fact is, if this were correct, the high of the day should be coming in right about now. If that's correct, we're going to see if that's going to mean anything or not, but I doubt it. All right, let's move on here, and we'll do one other thing here, and then we'll get ready to continue on. Let's get this Tesla crude oil. Let's get up to talk to crude oil a little bit. We're coming down to that level right now, and as you can see here, we're all the way up here. Very little happening here today, folks. As you can see, we had one small 382 retracement, I believe, here, and I was doing so many other things I didn't even look at it very much, but there was your first run up. You had a little ABCD pattern right here completing, but I don't think it made the 382. Let's just double check here. That's not what you want to do, Larry. You want to do the one that gives you the promised land here. Hold on a second here. There's where we are, from there to there to there. Yep, it did. There, it made the 382 there. It came down again. Had another one right here. Another 382, right? Oh, we had a big one right here. There was a bigger one right there. Let's see if that was the one that really did the control of it. From there's your high. Just a second here. I'm hitting the wrong buttons. Just 1 second here. Move this over. Oh, misses it by 10 pips, folks. There's another one. Hey, we'll be right back. 877-927-6648.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Okay, folks, Larry Pesavento for TFNN. I want to show you the difference between the notes and the bonds. This is the one that gives you the interest rates, car loans, mortgages. That's what it's based on. 6 times the volume in open interest in the bonds. So this is huge. I mean, it doesn't jump around as much as the bonds. You see, there's a lot of support supposedly in this area. We might take that out and make an ABCD to the downside, but the pictures are different. Now, this is a daily. Now, I'm going to bring up the bonds right here, and I'm going to do the same thing. I'm going to bring this up to the daily, and you're going to see here that we have a different situation. Move this out of the way. Let me get this volume stuff out of the way because we don't need that, do we? Okay. Now, that's why I'm saying we might hold that level. Now, look, you see where that level is right here? That's going back 6 months. The notes are way up here. See, there's a big difference here. So the bonds is where the problem lies, all right? That's why it must hold at 111, and if it doesn't, we're going to be looking at a much lower level, and that means that note is probably going to be going lower. But the difference between the bonds and the notes is substantial in here. This is trying to hold here. Now, we've been here for 1, 2, 3 days with some really bad news. I mean, they were been downloaded or downgraded by, what was the last one? Was... I can't even remember the name of the company, but Moody's downloaded, but the others had already downgraded it, so it's old news, so not a big deal. So let's keep an eye on that. Very, very important. Remember that U.S. dollar. It's at a real critical level, because if we don't hold that 190, that 99 level, boy, it's got some real problems to the downside. So that's another thing we want to be watching. So I think that's about it. We got 45 seconds left to go. Let's just see how the dollar is doing right now, and we'll see if it's still held that level that we were talking about this morning. We'll get it up here. And we're sitting right there right now, folks. We're 10 pips higher than the low of the day, so it's still holding, but not by much. So live every day in an attitude of gratitude, and I'll see y'all in an hour. May God bless.